Hi, good evening. Now we can start our class. Karibuni wote. Did we attempt the examination, the mock? Or did we all attempt? Ama kuna mwenye haku attempt? Did we attempt? Ama niulize swali vizuri kwa Nimrod. Nimrod, last time haukuwa na sisi.
I attempted.
Oh, you did, eh? Okay. Asante. Who else? Steve, did you attempt?
Yes, I did attempt, and on paper it seemed a bit simple.
All right. Okay. Sawa sawa. Asante. Lillian, did you attempt? And Grace as well? Lillian?
Sorry, I didn't get what are we attempting?
The mock, the exam, the one that was in the portal.
Hi. Oh,
Kasneb.
yes, I did.
Kasneb. Okay, sawa. Asante.
yes, I did. Yes, I did.
Okay. All right, Asante. Grace, na wewe?
Yes, I did.
Thank you. Then I'm a happy teacher. So welcome to our today's class. Being the very last one. It is not the least, but the last one, so that we can now prepare and head to the examination room. It has been a journey, and I thank God for your commitment. This far, God has enabled us. And it is my prayer that we will be able to deliver that which we have already studied. So our last topic is basically on what we call information technology and credit management. We are looking at how IT supports credit management. And I think where we are at the moment, there is nothing you can do without involving technology. So we can see that in the modern financial landscape, IT is playing a critical role in managing credit, whether in trade credit, whether in trade credit, whether in export credit, or in the consumer credit. All institutions are benefiting from IT. So we can say that IT streamlines and it enhances the entire credit management process from remember the credit cycle, from the customer recruitment, risk assessment, billing, lending, sales ledger management. We can say that IT supports all parts or the whole credit cycle, whether in collection, in communication, where we now talk about monitoring, in risk assessment, we have seen scoring. Then scoring is being done by by IT systems that have been made. So IT plays a vital role. I think that is important for us to know. And we can see that systems are a necessity if we are to have good credit management. And therefore, we need to ensure that it is well designed to serve all the purposes of a credit department. So in case you are, you find yourself in a position where you are preparing a new system for, to run your business, it's important that you also play a role in the whole process, so that you can ensure the system that is being procured in the organization serves all the areas of credit. So we can be able to ask questions about customer recruitment, customer data management, data capturing. Is the system able to support all that work? So again, we all see that IT, due to the nature of activities, maybe that are involved in credit, it helps us in tracking, in reducing, in reporting, in monitoring, so that our work can be easier in the department. Because you can imagine what you normally do on a day basis being handled manually, and you do not have a system. That can be very hectic, and of course that can lead to a lot of losses within the institution. So manual processes, I think they cannot serve in the times we are living, right? So a credit department, we say, requires an automated sales ledger that will help in a number of activities. I think there was a question somebody asked, they came across a sales ledger. This is the time that we'll be talking about a sales ledger. And maybe before I talk about a sales ledger basically is a record, or it is a report containing all sales related activities. An invoice, customer statement, withdraw it from there, credit notes, debit notes, cash receipts that have been issued to customers, discounts that have been extended to customers. All those are normally recorded in a sales ledger. So a sales ledger, therefore, it's a summary of all activities that are related to sales. And this is the ones where it's from a sales ledger, we are able to extract a statement, a customer statement. We are also able to extract the debtors listing or the aging summary. It comes from that customer ledger, sales ledger. So a sales ledger, what is involved around a sales ledger is billing. When we raise invoices, we find ourselves having to use a sales ledger. Collection or collections, generating letters can be stored in that sales ledger. Maintaining of customer information, contact, address, all those information. Reconciliation of customer accounts is also made easier by having an automated sales ledger. It also aids in cash allocation. You are able to match the payments against the invoice that is being paid, right? So general ledger postings, also we are able to obtain a general ledger posting for purposes of reporting and report generating. So we can comfortably say a sales ledger, an automated. Now when I talk about automated, this is where we have now IT. So we are able to do, it assists us in billing, it also assists us in collection, it assists us in maintaining of customer information, reconciliation of customer information, allocation, and all that. So a good credit management, what role should it be able to play, right? I think it is just what we were talking up there. Most importantly, it must do cash allocation, or what cash collection aiding. That is, we are able to have bank statements for the customers. We are able to raise receipts. We are able to match. It also should be able to help us in monitoring, or what we call credit exposure monitoring, so that we can be able to minimize bad debts. And it should also have flexible screen-driven reporting for the purpose of obtaining reports easily, so that someone can just get in and get the information they need. They make a decision concerning a customer. Kubadilisha hiyo kitu. And then characteristics of a good credit management system: easily accessible, it should be real time, it should be online, give you online access. Wherever you are, you can log in through maybe web and with a link. Ability to generate reports. Those are just bare minimums that a good credit management system should be able to carry. So characteristics, the features: easy accessibility, real-time, online access, ability to generate reports should be available. So which tasks are aided by information technology? I think we have said it aids the entire credit cycle. We've talked about customer acquisition. We've gone to maybe like credit application. We go to things like risk assessment and evaluation. We talk about monitoring. We talk about collection. We talk about debt recovery. So think of all the activities that revolve around those areas of credit, or those steps of credit. At evaluation, what are you able? You can capture data, customer data. You can get scores, scoring. You can quickly monitor customer account, provide statements for their customer using that IT system that has been procured by your organization. So the task substantially aided by information technology. This is capturing of application data. Remember what we are just talking about, the credit cycle right now. Supply of credit reference information, right? We can be able to have that information and we capture it, and we are able to get whatever we call the assessment or the scores for the client. We look at it, assessment of credit risk, selection of appropriate pricing terms and conditions. We will be able, that can be enabled by a good system. Sourcing some exchange rates, this for people who are in the banking sector, you are able to check and select the best value or the best rate that you can get in the online market. Completion of sales agreements. You are able to do all that. Nowadays, actually, I'm seeing most of the time, people are signing, are able to fill in their the agreements, and they are submitted and they are captured within the system. So task substantially aided is capturing of application data, supply of credit reference information, assessment of credit risk, sourcing of exchange rates, completion of sales, and many, many others. So those are just but a few. So a good MIS serving the purpose of credit or serving a credit department, what reports must it be able to provide to us? What reports? It should give you, if you're in the banking sector, it should be able to give you the reports that are related. When I talk about a portfolio at risk or PAR, you should be able to generate PAR from that system. When I am looking at on the other side, I should be able to generate the aged analysis or the debtors listing, showing balances in every age category. So aged analysis is a report that a good MIS should be able to generate for you, because we have said MIS for credit assists us even in generating reports. So aged analysis is a report of a limit report to show accounts that have exceeded credit limits. And we say the credit limit is a ceiling that has been designed or that has been attached to a customer, above which the customer is not allowed to trade unless they make payments to create room for more purchases. There is also another one that we call overdue report, where the report shows all accounts that are due. So that also can be generated by a good MIS. Percentage of accounts opened to those declined with an explanation by fact. So you can be able also to see which ones have we approved, which accounts have been opened, which one have not been opened, and why haven't we opened those accounts. So we are able to track that. And you can also track, look at what we call TAT, the turnaround time. That is the average time being taken to open new customer accounts. How long are we taking? Then we can also get a report on percentage of accounts performing to terms. So that report can also be made available by a good MIS. If you have checks that have bounced, a good MIS should be able to give you a report of all payments, all checks that have bounced or that have been returned unpaid. It should also give you, remember when we were talking about the day sales outstanding, DSO, that report showing you how long you are taking to convert credit sales into cash. Remember the DSO, we talked about that. Then a good MIS should also be able to provide us with a cash flow movement this month compared to budgets. Where are we as far as collection, as far as recovery is concerned? This is what we were anticipating. This is where we are. Bad debt provisions with past comparisons supported by facts. So all those reports, you can easily be able to get those reports. So The other thing we can also be able to get is consumer credit reports. We can be able to look at, for example, this is now number of applications that we have received, the acceptance rate. Those are also reports that we can get so that we can measure our performance as far as customers are concerned. You can be able to areas, you can have areas grouped by age of accounts and severity, overdue accounts by age. So you can get all those reports, percentage of repayment program or promises kept, bad and doubtful debt provision, percentage of delinquent account progressing to a further month overdue. So all those reports a good MIS should be able to provide. So that is usually a very rich area as far as exam is concerned. So they can check with you. They could ask you a question. You list or you describe or discuss or outline reports a good MIS should be able to provide or should be able to generate for an organization or for a credit department. So those are some of the reports that you can talk about that we have just talked: the age summary, age analysis, the DSO, the portfolio at risk. For those who are in the SACCO sector, you can look at the you can look at now payments that have been returned and paid. All those reports are made available by. So when you sit in a forum where you will be define or you'll be coming up with a system, make sure that the system that you will be adopting is able to provide you with all those reports at any given one time, for purposes of reporting and for purposes of managing your credit department. So maybe before I move, maybe I should be asking you, what benefits have you drawn from automating your credit activities? What benefits maybe do you draw from automating credit management within your institution? How does the system you already have assist you in managing credit? Maybe that's a good question that we could ask ourselves. Hapo tunaulizana. Nitaanza na Anastasia. Benefits. What benefits or what benefits are you drawing from automating your credit activities? Anastasia?
The system is able to give the signals of the accounts which are due, and also giving the aging report.
Yeah, okay. Asante. Yes, which makes it easier for your organization to make decision. Asante sana. Yes, so they come with a lot of benefits, and I think one, it saves on it brings about a cost benefit. This is where that you don't have to be so many of you in the department to do roles within the credit department. So there is saving on that part. There is time saving. You save a lot of time. If I can just get into the system, and do whatever I want to do, then I will not waste a lot of time manually figuring it out, how I'm supposed to report, how I should make the report, so it saves time. And when time is saved, we also see there is productivity gains. We are able to do much more within a lesser time, and we are able to allocate time for the most important duties like making follow-ups from customers to make payments. So data can easily be accessed and analyzed, because again, and this one we can say, without time consuming manipulation and processing. So we are able to also make decisions quickly and with confidence that the data are both time relevant and accurate. The other one is integrated information can also be kept in categories that are meaningful to profitable operations. So those are some of the benefits and many more. So time, cost, productivity, decision making, data access, easily access of data whenever needed. And it can also be, we've seen that it can also be integrated so that it can also assist our organization in ensuring that we remain profitable as an institution. So on customer recruitment and risk assessment, this I'm actually highlighting. That was an introduction. What roles? How does MIS aid in customer recruitment and risk assessment? I think we can say that it assists in customer recruitment in the area of evaluating for credit risk. And this is where we are able to install credit scoring models that can be used to appraise or assess customers. Nowadays, we are also talking about use of AI and machine learning using algorithms to predict customer risk based on behavior and historical patterns. And we have seen, I think there is one tool that we are working on. It's called Zuri Score, that is able to give predictions, that is able to analyze data and give you predictions on how good or how a customer is able to keep the promises. So all this, we are finding it being enabled by those systems. Also, KYC, know your customer systems, ensuring compliance and verification of identities, minimizing the risk of fraud. So that's also an area that we are able to benefit. And still under customer recruitment and risk assessment, we are able to see that we are able to speed up onboarding, since we are able to assess customers. We are able to, the process of assessing for credit risk is automated. So it is also making sure that there is accuracy in our assessment for a customer. And it has also its own challenges. Of course, systems for scoring also have their own challenges. High setup costs, not every organization may afford. And there is also a need for continuous updates to scoring models, which organization may not be able to do. And this is why we talked about outsourcing. So some of those services we are outsourcing. If our system cannot score and do that, we outsource those services. And most now companies, what they've done, they've integrated their systems with the CRB. So immediately I check in, I want to borrow, immediately their system also sends a message to the CRB portal, and I am able to be assessed, and my score is obtained. So even if we may not have the scoring or the risk assessment aspect on our system, we may link or we may integrate it with the CRB, which will also assist us in getting the scores or making decisions to lend. The other area, other than what we are calling customer recruitment and risk assessment, is customer master file. The customer master file. Very important. Customer master file. What about customer master file? So this one, we say it is a centralized database that contains all relevant information about a company's customers. So this is where you will pick, and I think I've seen nowadays most organizations are now scanning when a customer fills the application form that contains their data. It is nowadays uploaded. It is scanned, and that information is uploaded in their profile. So the customer master file, this is where all information about a customer are stored. So an IT system makes it easy for us to store customer data in one place. You can imagine if we had to store all invoices, all documents, everything in various files, it gets very hard for us to locate them. But if with the help of IT, we can keep them in just a very small space, and we can access that information whenever it is needed. So we can see IT enables us to have the centralized data, which is the personal details of the client, the credit history, payment behavior, transaction records into one accessible location. And then we can also have what we call real-time updates. The master file is updated in real time, ensuring that all departments have access to most current information about each customer. So whether in marketing, whichever branch, whether in Nairobi or Mombasa, that information is available to all that needs it. So you also don't have, you don't keep this information about a client, another one keeps it differently. That information is centralized and put in one place. So IT systems ensure that data in the customer master file is accurate, consistent, and secure, reducing the risk of errors and fraud. We all agree that in credit, for us to be good in whatever we are doing, that information we have must be accurate. So IT system is assisting in that area. What about the area of billing and lending? Maybe I'm just re-emphasizing because I have talked about it. IT, of course, has brought a lot as far as billing and lending is concerned, because these processes now have been automated. So you are able to bill online, you are able to lend online, you are able to raise automated invoices, tracking payment due dates, and managing lending schedules. So automated billing, we are able to generate invoices through the system, send payment reminders, apply late fees if they are there, penalties, reducing the manual efforts required to billing management. So ukiweka tu na select items zile unataka kuuza, kama ni maybe it's a shop, an agrovet, you're able to pick all the item the customer wants within a very few seconds, and you raise an invoice and the billing is complete. Then loan management, then we can see also IT also is helping us in loan management, and it is the systems are able to manage the entire lending process. I think we've seen that where we have the application being done online, disbursement is done, repayment also is followed up online, ensuring that the loans are well received. So we also see a big deal as far as billing and lending is concerned, because it's also assisting us risk-based pricing. The system is able to implement risk-based pricing models where interest rates and terms are adjusted. I know we may not have gotten here, but this is where the banks are. I think you have been hearing that now they want to adopt risk-based pricing. So what will assist those institutions is having proper IT system that will have all the information, all the data about the customer, how they receive, how much they receive, when they make payments, when they receive payments, and their decisions are able to be made. Payment gateways also, they are facilitated through what we call secure online payments, which are linked to the billing system. For some of us who are old, we would get payment, raise a manual invoice, a receipt, then we post that receipt, then we allocate. But nowadays, you are able to, that money is received electronically. Automatically, the payments are matched with the particular invoices that are being paid. So that is a very powerful area that IT has assisted in credit department. So, and you find that when this is aided by IT, utapata kwamba there will be less errors. You'll find that there will be no confusion of payment posting and all that misallocation that used to be there. Right? So we have talked about billing and lending, how IT has revolutionized that aspect. Then the other aspect of IT, I'm just repeating because I had summarized up there, is sales ledger management and controls. You will agree with me that if there's something that needs to be well managed as our sales, because it is from those sales that we get payments from our customers. So what we say that is this sales ledger, which I've just mentioned, which is a record of all transactions in an organization, which include cash, credit and debit notes, sales order, discounts. That information are normally contained in a sales ledger. So this sales ledger, we are able to do a lot of controls. We are able to check, have all the invoices being captured? Have all those credit notes that have been issued, have they been captured? Invoices, statement, customer statement. So it aids also assist us in ledger, what you're calling sales ledger management. So we've said that it is a record comprising various transactions that make up the individual customer balances. So without a sales ledger, we can't have the aging summary. We can't have the, we call it the aged analysis. it is the sales ledger that gives us that information. So you should be able to define and explain the term, the sales ledger. So sales ledger management is key in tracking sales transaction and managing accounts receivable. And a good IT system, of course, enhances many things. Automated entry, that is, sales ledger can be automatically updated with each transaction, reducing manual errors and ensuring the records are always up to date. Reconciliation, so IT systems facilitate automatic reconciliation of sales ledger with the bank statement, so you don't have to do it manually. Also, IT also assists in, as far as sales manager is concerned, assist in monitoring and alerts. So the system can monitor sales ledger activity, send alerts for overdue accounts or discrepancies, helping to manage credit risk effectively. So that is mainly the areas that IT assists us. So for sales ledger, I think I've mentioned the contents of a sales ledger: customer details, invoice, payment records, outstanding balances. We get a summary of all outstanding amount owed by customers from the sales ledger. So we can say a sales ledger provides vital information for managing credit risks, ensuring that receivables are collected promptly and maintained, cash flow is well maintained. Then we talk more about sales ledger. Any question or any comment? Hope I'm not very fast. Mnaniambia kidole ama kidole chini. Nagojea wakubwa wangu. Steve amesema yeye ako sawa, Lilian ako sawa. Betty ako sawa. Aya, tuendelee basi. We talk about types of sales ledger. We have what we call the general sales ledger. This one tracks all sales transaction, receivables for the entire company. That is the general one. Then you can have a customer specific ledger. Unasikianga mtu akisema, can I have my ledger? So this one is the one that maintains detailed record of transaction and receivable for individual customer. So it could be a customer specific ledger. It could also be a departmental sales ledger, which segregates sales and receivable by department or business unit, enabling more detailed financial analysis and management. So you could have those types of sales ledger. So we can say benefits of a sales ledger, of course, showing or providing us with customer balances for collection follow-up. Setting of collection targets. We will not set targets if we don't know how much money is outstanding, and this one is provided by the sales ledger. We are able to do forecasting of cash receipts expected from customers. We are able to provide statistical information on a company's sales record for decision making. So we are able to extract how much have we sold this year on this product since January to date. How much did we sell last year? We can get that information from a sales ledger. So it also helps in risk management. That is, we are able to know who has bounced checks, who has not paid us, which accounts are overdue, so we can take that action. It is the source of customer statements. It is a source document for sales figures that are posted in the income statement of the company, and it helps in audit trail for the purpose of checking accuracy of data reflected in a company's financial statement. So we are able to get all the sales, we are able to get all the payments received. You can imagine, for me to be able to know our balances outstanding, I will have to take all the sales invoices for a particular month, get the totals, and then I check all the cash receipts for that particular month. And then from that, I'm able to get the data, what is outstanding. So it is a powerful tool for every organization. So the sales ledger helps us in a number of controls. It is through the sales ledger that we are able to automatically invoice, have automated invoice numbering. So all invoices can be numbered by the help of a sales ledger to make them unique. to make them sequential so that they don't repeat. So when you go to raise an invoice and that number that you have put that is appearing exists, it declines to process. So the other the other controls that are enabled by a sales ledger is the issues of cash book. So we are able to payments and receipts can be captured, and we are able to know how much we banked on that particular day, and which one was receipted and which has not been receipted, and also to reconcile our bank balances with the sales that we have made. The other control with the sales ledger is nominal ledger reconciliation. We are able to check. When I talk about the debtors ledger, my debtors ledger should balance with the sales ledger. I should see these are the payments, these are the invoices. So what is the balance? So we talk about items posted in the sales ledger, also are posted in the general ledger, and they must all the time reconcile. So if I have my debtors general ledger, I should be able to marry it with the data that is found in the sales ledger. That is how powerful a sales ledger is. The other one is audit trail. So through the sales ledger, we are able to get all documents that were raised at a particular time or for a particular customer. So we are able to follow who is this that raised this invoice. Yeah, when was it raised? What was the time? So it keeps even sometimes the timing when the billing was done. It keeps the invoice numbers that were raised and all that. So we can see that. It also assists us in generating customer statements, or what we call the customer summary of transaction. But we can also extract them from the sales ledger. So you can agree it's a powerful one. And under statements that are normally generated by a sales ledger, we talk about types of statements. We could have a brought forward statement generated through the sales ledger. This is where we have a balance brought forward. The statement does not open with it all and outstanding transaction being showed individually, but it brings forward the bulk figure. Like if I am talking about a customer owes you 2 million and those 2 millions are listed in terms of invoices, going to the maybe statement in the next month, it only captures the 2 million but does not capture any documents that was there before. So that's why we are saying the statements that are generated by sales ledger can be of two types. It can have a brought forward kind of statements whereby block figures are shown for the previous month bill or balances. So we can, for example, like I have an example here. What do I have? That is the client name, reference, date, brought forward, like this one here. For January 2016, we can see that. Let me enlarge. Yes, we can clearly see it has a brought forward figure here, the one I'm showing. So on 07, they opened the month with a balance of 40,600. So that is on a brought forward type of a statement. But we have the second one, which is an open item statement. That 40,000 will be shown in detail. It will show which items are open in that customer account that are making the 40,000. And this is where we have, because we have seen this was on 1st of July, they opened with a 40,600. That is an balance brought forward type of a statement. But when I deal with an open type of a statement, this statement shows in details all open items in a customer account, the credit and debits, and it will show, for example, those invoices that amounted to 40,600, they are made up of what and what and what. We have this invoice date 10th, dated 5th, another invoice dated 10th for 12 and 26, making the 40,000. So if I want to track, I know which invoices are pending amounting to 40,000. That is on an open type of statement. a brought forward kind of a statement, it brings forward a block figure without the breakdowns of what is making up that amount. So that is an open item statement. So the role of a statement in credit control, I think we can all agree it is made for what? Yeah, we can see the invoice is the bank statements, or what we call account statements. Account statements. Role of statements in credit control acts as an early reminder to customers. So you'll hear many organizations say, sijapata invoice, I'm yet to get my my statement, I can't pay without a statement. That is because they need to use it for reconciliation as well. For both client and the customer, they want to marry the figures. Statement acts as a remittance advice. When they make payment, they can tick and say, I'm paying this and this and this, so that you can be able to allocate payments. Helps in identification of fraudulent transactions in a customer accounts in good time. So when you see an invoice which is remaining persistently not being paid, then you know that there is something that is happening on the other side. So another thing aided by IT is connections. So a system is able to pick out all telephone conversation, telephone numbers for customers, and we are able to call customers for purposes of payment. So we can see also the system aiding us in collection. The system is able to record conversations. Some systems are very high profile. You're able to record what you said with the customer, or you to input it, in the system. It can generate for you follow-up letters. Yes, it can also be used to search for clients who have been out of trace. This is possible through CRB. And we can also be able to collect backed by properly kept records. So we are able to have record statements, accounts, updates, whatever, when we are able to make decision as far as payment is concerned. Rhett has talked about automated collection support by this IT system. I think we can see automated collection systems where we are able to automate payment reminders. We are also able to carry out direct debit and auto payment options. That is, customers can set up direct debit or automated payment options, ensuring timely payments. Remember, we are talking about the role of IT in collection as a duty. Data analytics for collection. We are also able to analyze data for purposes of predicting the what we call the probability of payments or non-payment. We also see the system aiding us in accounts queries. Yes, we are able to know accounts that have discrepancies, excuses for non-payment. And we also, because that one affects payments, so it also, IT enables us to keep track of the queries that have been there under payments and all that, and we can be able to demand for payments, or we can be able to raise credit notes particularly for the customer. Then common causes queries, as far as queries is concerned in a department, I think this question also is very common. Ukiangalia zile maswali ziko za past na zile nimetuma, we can see what we call under delivery on an invoice. Other queries, damage deliveries, overcharging. You can have a query on overcharging, unknown discount structures and all that. Then we, sorry. Sorry. Hope we are all back. Yeah, so common queries, we find that the IT is also able to assist us in areas of similar to those queries that we've seen. A query can be raised due to an under delivery, so you can be able to go to the sales ledger, be able to track which invoice was this, who delivered the goods, when were the goods delivered, we can get that information. Damaged deliveries, that's also another query, overcharging and all that. The other one is now finally that what else we are helped by IT is order vetting. We are able to vet. What is order vetting? Order vetting, this is where you need to authorize a billing for a customer or goods to be supplied to a customer based on the status of their account. So you want to vet every order to ensure that you are not selling to customers who have exceeded their credit limit, or customers who have not paid for a very long time, or customers who are maybe experiencing challenges in terms of payment. So order vetting is a role played by credit control, and this one we are able it is automated by the help of the IT, right? So we are able to keep our accounts within the credit limits that has been provided. So that it is important before an order is stopped. We also say that don't stop orders. Even if maybe the account is bad, it's good to find out why the customer has not paid, and also to notify our salespeople. Remember, as maintaining the sales relationship with the credit department. Then our final section on this one, lesson ya leo, was a bit short. Online lending platforms. We talk about online lending platforms. I think all of us have an online lending platform. Where we have seen a number of, this is where technology is being leveraged in terms of making it easier for customers to access credit facilities within our institution. And we have a number of them where we have peer-to-peer lending. This one connects borrowers directly with individual lenders, cutting out traditional financial institutions. So as IT, or what we are calling information technology, has enabled peer-to-peer lending take place. We have seen the increase and the rise of digital lenders, where the companies that are operating online, purely online, they provide loans and all that. We also see mobile lending apps, apps that allow the user to apply for and receive loans directly on their mobile devices. And we have seen now the fintech lending. Fintech, that is financial technology lending, the one we are talking about there. The peer lenders, the digital lenders, the mobile app lenders. And we have seen that they have assisted in the speed and convenience. You can easily access the credit. Accessibility has been made easy. Innovativeness in risk assessment. We have seen that. And disadvantages of all those fintech lending, we can say there is high interest rates, regulatory challenges. Umeona juzi, I think Central Bank decided to register all digital and mobile, digital and app lenders. So if you look at CBK platform, you'll be able to see where those that have been approved and those that have not been approved, you are able to know them. And of course, there are issues to do with data privacy concerns. Remember, you could be called by these fintech companies telling you that so and so has not paid, yet you are not a guarantor. You did not get involved in any way with this client. So I think also those are some of the challenges that we are seeing with what we are called the fintechs or the digital lenders. So the digital lending, we've said we have various platforms, and we have said we have peer-to-peer lending, digital lenders, and mobile lending apps, and we have seen advantages and disadvantages. So if somebody asks you a question, what is fintech lending? I think this is where you just need to say it is where organizations are leveraging on technology to do lending, to provide credit facilities without one going, without one having to go physically to those institutions. So those are some of the things that are contained in this topic of information technology. So key areas to note in case you come across this questions in that area. I think the most important thing that we need to take note of, activities that can be automated by a sales ledger, or I mean by information technology. We've seen billing, collection, maintenance of the sales ledger, maintenance of customer information, the role of a good credit management system. We've talked about a number of them. We have talked accounts, collection. We've talked about production of customer statements, characteristics of a good management system. We've talked about easily accessible, real-time, online, ability to generate reports, easy to use, all that. Areas that IT assist us on. I think we've talked about even generating of reports. So if you are asked, mention types of reports that can be generated by a good IT, you can talk about over limit reports, aged analysis, percentage of accounts performing to terms, day sales outstanding, the consumer credit reports also, number of applications, acceptance. This is now when we talk about the banking sector, where we are lending, or the SACCO sector. What kind of reports can I be able to generate with a good ICT? So those are some of the reports that you can get. Benefits, we've talked about benefits of credit management systems. It is less costly in the long run, that is, because the cost is usually high at the point of implementation. It is time saving, brings about productivity, increases productivity. Data, easy access of data and information, helps in decision making, and it can also be integrated, and so that it can give or make give us more value to the business and bring about profitability. So we've talked about the various areas that I did at length: customer recruitment, customer master file. We've talked about the sales ledger management controls that are there. We've talked about what else? Sales ledger controls. Here you go under sales ledger, audit trail. We've seen that. Statements, production of statements, and we've talked about two types of statements brought forward, and open items statement. We've also looked at the role of statements in a credit control. So read more about the statement so that you can understand. And then we've talked about IT in collection, how it aids us as far as collection is concerned. And we have talked about it, IT in order vetting, helping us to look at all that. And then finally, we've talked about online lending platforms, and we have seen the various types of lenders, the peer-to-peer, digital lenders, mobile lending, and we have looked at advantages and disadvantages. So I think with that, I will not have much ado. I don't have much ado. It is that time we start asking ourselves questions. I answer those questions, and we can call it an evening.